Cryptocurrencies that are really speculative assets. I do think they are risky. They're not backed by anything.
Once the Fed came in, people now expect the Fed's going to come in again.
What's happened is the balance sheet has become more of a tool of policy. The Federal Reserve is using its balance sheet to drive better outcomes.
Which is raising interest rates enough, tightening policy enough to corral inflation without tipping the economy into a recession. Easier said than done. History is not necessarily on their side.
I think we are right in maybe the biggest bubble of my career.
It's pretty clear that we are heading for a recession. Now, some think it will come in 2 years. Others think that it could come next year. But could we already be there? That's exactly what I'll be exploring in this video. I'll be taking a look at some really important data that shows that we may already be close to the cliff. So, don't go anywhere.
Oh my God. Guys, have you been lied to? No? Did they lie to you? Well, let's find out.
So the paths are leading to some form of a digital currency. So do you think it's coincidence that we're now at the exact same moment seeing executive orders and mandates come out, and in it there is talk of a coming Federal Reserve digital dollar?
No, it's par for the course as far as I am concerned. I mean, how far along they are, I'm not certain. I have looked into this fairly deeply. There is some talk of going on the back of, let's say, an XRP or some other currency that's out there now that's functioning well and has been basically tested, and then putting a CBDC on top of that. That certainly could be achieved. And if it were, it could expedite how quickly this comes to the fore.
But first, don't forget to subscribe to the channel, hit that like button, and turn on post notifications.
Economy.
The Federal Reserve itself was created after a major crisis. There was a financial crisis in 1907. We didn't have a central bank, and there was a large study done that concluded that part of what we needed to avoid these future crises was a central bank that would be able to create more currency during times of stress.
The Federal Reserve has proven itself repeatedly over time well positioned to be the first responder in the face of any type of shock.
The Fed's most important tool is the federal funds interest rate.
The Fed funds rate right now is between 0.25%. That's as low as they can go.
It's highly unusual to have interest rates close to zero. Basically what the Fed does is it sets the rate at which banks borrow money between themselves overnight. Now from that short-term rate comes all the other rates that people pay for in terms of mortgage rates or home equity line of credit rates or automobile loan rates. But ultimately all rates are set by banks and by the market based off of that short-term.
Guys, check this out from the CNBC News YouTube channel. America's central bank, the Federal Reserve, can inject cash into the financial sector to prevent breakdowns during emergencies. One way it does so is through the large-scale purchase of bonds. The central bank has racked up nearly $9 trillion in bonds to calm investors during past crises. The Fed is saying it will soon dial back this program. The pace at which the Fed tightens monetary policy may create substantial market headwinds. The U.S. central bank has long used its power as a lender of last resort to add liquidity to markets during times of distress. When the central bank buys bonds, it can push investors toward riskier assets. The Fed's policies have boosted U.S. equities despite tough economic conditions for small businesses and ordinary workers.
Experts call it the lender of last resort.
The lender of last resort was in many ways the original function of the Federal Reserve. We didn't want to have a central bank originally because we were worried about there being so much power aggregated in that way, but we needed this function, and so we might as well have it put in place in a way that allows oversight and accountability.
How do people make money from recessions? A recession is a period of declining economic performance, and during the last major one, the 2008 to 2009 financial crisis, we saw markets fall, erasing trillions of dollars of wealth around the world. People looked at their investments in shock as their houses and stocks plummeted in value, many scrambling to sell and save some of their money. And yet, many millionaires, including myself, believe we owe a large part of our fortunes down to to recessions? That's because recessions press the reset button, leveling the playing field, and it looks like it's happening again. However, there are two different types of recessions and many possible ways to react. This leaves most people paralysed by fear, uncertainty and doubt, while history has proven that the people who are aware of the reset get to work. So now we know this is the perfect opportunity to make money. How do we know when this reset button is about to be hit? To understand the whole picture, we need to look at how we got to this stage.
There be a digital dollar coming? According to this Harvard study that just launched yesterday, there will be. First, it goes into what is a digital dollar and what are the features. Digital dollar is Fed-sanctioned fiat currency that is backed by the U.S. government. It will be mined directly by the Feds and put into circulation just like fiat currency, have the same features that banks use to perform overnight depository with the central bank, earn interest and carry out overnight interbank lending. The overnight Fed rate will be determined the same way as it is now. It will maintain the same parity with international currency, and FX rates will be determined by the same supply and demand laws as a fiat currency. Initially, for some time, fiat and digital dollars will be in circulation, with digital dollar maintaining constant parity with fiat currencies. Feds will maintain supply of the digital dollar should there be a run on digital currency due to fraud, sovereign instability, or international conflicts, and thus the digital dollar will perform the same functions as fiat currency, but it will be more compatible with other digital platforms like blockchain, AI, machine language, and digital FX platforms. Then it gets into why we need a digital dollar. The digital 21st century is underserved by an analog reserve currency. A digital dollar would help future-proof the greenback and allow individuals and global enterprises to make payments in dollars irrespective of space and time. That means they can do it at any time. Blockchain technology is sufficiently mature to address needs of fiat currency in the digital format. In addition, AI and machine language are evolving rapidly. FX trading platforms are now AI and somewhat machine language compatible. Smartphones and internet-based global and national trade have expanded significantly to the tune of $1 trillion in 2020. And here's where it gets juicy. Two blockchain-based protocols, Ripple XRP and Stellar Lumens XLM, are gaining popularity as the coins of choice for many as international business. It seems that a digital dollar will provide a missing front end to facilitate international trade robustly, less expensively, and safely. Then we got the little flow chart of how everything will work, and we got the patent up here dated May of 2020, and it says a simple blockchain-based cross-border digital currency transaction using XRP or XLM.
Now, before we get into that, let's take a quick commercial break to check this out. Speaking of an innovative digital currency, we have the gold secure currency, or GSX for short, primarily referred to as the world's first growth coin. So the GSX platform, which happens to be one of our sponsors, just launched its most extensive mining update a few weeks ago, and it appears to be the biggest they've had so far. The Gold Secure Currency platform is a crypto project with an ever-increasing asset backing of a secured asset trust currently estimated to be worth over $7 billion, and can facilitate growth like a traditional cryptocurrency. So according to the recently announced mining updates, which appears to be the biggest they've had so far, the founders of the Gold Secure Currency platform enjoy ownership rights to thousands of acres across southern Africa, with two huge claims in Zimbabwe. The first of these humongous acres is situated near the mineral-rich suburbs of Makaha, with a significant gold reef that will allow for a much easier mining and much more substantial amounts of materials to be mined daily. The other newly acquired claim resides near Chinhoyi and is estimated to have a landmass of around 2,500 acres of land rich in minerals, gold, copper, and other valuable metals. Mining will commence in no time at all. Adoption of GSX as an everyday usable currency is underway, allowing daily marketplace usage thanks to its sub-2-second transaction speeds and stable growing value. Right now, the price is a very low-risk buy-in, and these massive projects will go a long way to get the value of GSX up to the dollar mark, so GSX has enormous investment potential. As a result, the next few months will be some of the most exciting months for GSX.
So we've been living in the golden age of investing, with the top 500 US companies experiencing over a decade of continuous growth. However, Just like an Olympic sprinter who needs a break every now and again in order to recharge, so does our economy. People have become soft as they haven't experienced overall negative returns in what seems like forever. But why is the economy taking a breather now and not during the pandemic? Well, quite the opposite happened during the lockdowns. Everyone was stuck at home, getting free money, and they were falling in love with the idea of investing. It became very hard to avoid the topic wherever you went, as people were seeing the stock market as a magic money printer. It was also a lot easier for people to use their stimulus money to invest, as they didn't have to work for it, and therefore the perceived risk was much lower. This means that all these new investors have been playing the stock market on easy mode. However, now the free money has dried up and interest rates are increasing, it's a lot like when you go from the apprentice to the master difficulty on Star Wars Fallen Order. The game is still worth playing, it just might take a little longer to win. Some people will of course put down their controllers or smash up their monitors, while others will patiently improve their skills.
So I got to know what's going on in the financial markets, but you know, at this conference that we're all at here in Miami, Crypto, Bitcoin 2022, for the first time on the first day, I looked out in the audience, it was all the giant institutional investors. They've never come to this conference, never. And I started asking, guys, what are you doing here? And they're saying, we sense the world's changing. We see the policy coming. We see these senators showing up here. We know they're going to make this thing investable. It's going to be huge. And so I'm investing privately in these things. I'm an investor in FTX. I have to disclose I'm a paid spokesperson for FTX as well, along with Tom Brady. That's a good crew to be with.
Yeah, absolutely.
Yeah, and so it's fun. And I believe in what they're doing. And so to me, this is the 12th sector of the S&P. We just don't know it yet. And in 10 years, we're going to wake up and say, wow, we have 11 sectors. Now we have 12. It's such a big part of the economy.
Should these elites acknowledge the FTX exchange, which has been thriving over the past year or so, and has some sort of hidden link to XRP through the Uphold platform? Uphold, on the other hand, has a very strong background with the Ripple team and XRP. From all this, we find that Ripple and XRP aren't far off the elite's radar. This one right here says only 73,950 people own more than 25,000 XRP. That's about 0.0009% of the world's population. Let that sink in. Although the source of that data can't be verified, it stands to reason to say that those numbers aren't far from the truth, as you'd find if you do a little bit of research. Without reasonable doubt, that's actually a lot of people within first world parameters, which is where more likely than not 75 to 85% of those wallets reside, and essentially among the elite 1%. Little wonder they've been trying so hard to shake you out. Once again, I say this, people, wake up and let that sink in.
You have to think in terms of counterfactual. If we had not decided on March 18th, when we put together the pandemic emergency program and then subsequently increased the volume of commitment that we made to the European Union economies, we would be in a devastated situation. So I don't regret any of that move that we took on that day, which was 4 months into my job, to significantly increase the size of the balance sheet, because that's all we had. Yeah. Otherwise, the economy would have collapsed and it would have been even accelerated by a financial crisis.
You had to do it. It was the COVID crisis. You say that's what we needed to do. But how do you get it?
It will come. It will come. In due course. Yeah.
How?
In due course, it will come.
Yeah.
If the size of your debt problem is so big that it can't be paid off, and in fact, even inflation, which is the usual way you would seek to default on your debt slowly over time, you can't get enough inflation generated, then there is one further option, and that is you literally abandon the entire system of money and accounting. And I know that sounds unbelievably radical, but we've seen it happen before. And I explained the example of Britain in 1834, when they abandoned the traditional system they'd used for 1,000 years at that time, which was called the tally stick system. Anyway, bottom line was, why would you abandon a system that's worked perfectly beautifully for 1,000 years? And the answer is, you had 200 years of war debts that had accumulated. They were unable to get inflation up enough without causing social unrest. And so the government said, hey, let's actually take the tally sticks back and give people this great new innovation called paper money. Now, we're on the brink of a similar step change. And the way you'll do it is you're going to move to electronic money in conjunction with blockchain. Blockchain is the new ledger, and e-money is the new currency. The question is, whose e-money?
Meanwhile, Ripple continues to build in 55 countries and hundreds of financial institutions, and the great success On-Demand Liquidity solution, which now has near global coverage in 22 destination markets, including Mexico, Japan, Australia, South Korea, and the Philippines. What do you think about all this, guys? Is Ripple the offender or the defender in it all? Where do you see Ripple and XRP in the next couple of years? Maybe between 5 to 10 years? Let us know in the comment section below. And don't forget to check out some useful links in the description, such as the one to sign up for the class member form to sue Bill Hinman, Jay Clayton, and others. Check that out and let us know what you think. Hope you enjoyed the video, and as always, we'll see you in the next one.